Okay, good. We're live, I think. Yep. Okay, so when the trend is headed for a retracement, traders who are a little bit impatient, they start to force buys while the market is pulling back. So if the market is going to pull back in March, and we're going to start to see this extended move to the downside, if you're going to be forcing buys at every 15 or 30-minute previous low 88.6, you're going to get crushed. And all the profits you made on the buy side, you're going to end up giving back. And so the biggest thing is like for the first, let's say if it's a 1 month retracement, for the first 2 weeks, traders force the opposite direction. They keep trying to catch the knife as it's falling. Then the last probably week or 2 weeks of that retracement, there's something called capitulation. When you finally give in, you're like, all right, it's finally bearish. You start selling. You have 1 week of success and you're like, okay, I'm going to continue to sell because that's the new trend. And then all of a sudden the market goes back to the higher time frame trend, only to leave you forcing sells when the market continues for buys. Put a one or put anything in the chat if you guys have experienced that before, where the market starts to pull back. You're still forcing the main direction. You're still forcing buys. It's pulling back bearish, but you're still forcing buys because you think it's going to continue. It has to continue at some point. And then after you've lost a considerable amount of money, then you capitulate over to saying, okay, maybe I was wrong about the direction. Let me flip and jump into the opposite direction. Jump into the opposite direction, have a little bit of success, only for the market to continue back bullish. How to avoid that is to keep the perspective of the higher time frame in mind. Keep the higher time frame trend in mind, and keep the higher time frame areas of structure in mind. So when you go up to the higher time frame and you're doing a top-down analysis, those might not be the intraday levels that you're going to trade from. Okay, because if you're looking at a daily or a 4 hour range, you probably are never going to see those daily zones. They're way outside of your 4 hour range. But when price finally gets there, it's going to be a major turning point. So learning how to identify those levels, and then even more important than just doing the analysis and having them plotted on your chart, take some time at the beginning of every day, or especially at the beginning of every week, but at the beginning of every day to zoom out first, get context, get perspective about the big picture, and then go into the smaller time frames to execute your day trading strategy. Cool? Can I get a moderator in the YouTube comments? Please clean it up. Make sure everybody's being respectful. Happy Sunday, y'all. March, typically not a great month for stock market performance. If we look back at the past, I would say probably 5 to 6 years, you'll see typically a retracement around March. Not sure why. There's probably 4 or 5 main reasons. Earnings season's coming out. There's some reshuffling of the deck. After a prolonged, market push up, there needs to be some kind of retracement to balance it out. And then, of course, there's 2 or 3 other reasons. Maybe some folks are selling off losses for tax reasons, selling at a high to recoup some of their some money on the stock that they own, whatever it might be. March, typically lower performance. Now, let's talk about mindset real quick, some reminders as a trader. So we talked about the technical analysis and understanding the charts. Now, at Chart Addicts, the way that we do education is with an understanding of 3 main factors that impact a trader's success. Number 1 is going to be the market. So understanding the technical strategy, so your edge, understanding how markets move, so the basics of trending markets versus ranging markets, higher highs, higher low, and then understanding volume and time. And that's the market. Then there's mindset, and then there's money management. So mindset goes into not just your performance mindset when you're executing or managing, but your mindset regarding your self-esteem, your mindset towards your ability to achieve your goals, which that level of confidence is going to affect your trading performance. And so it goes markets, mindset, and then the last piece is money management. You have the first 2 right, you're catching incredible trades, but you're getting so cocky that you're over leveraging. Every time you start to have a winning streak and you're self-sabotaging back. So money management is that piece. Traders, because all of us are unique individuals. You've had your own unique life experiences that have led you to this point. So when you're going to build a strategy, or you're going to build, even if you already have a system and you want to find out what is wrong with the system or what you can improve, see which one of those 3 categories it is. Whenever I have a horrible performance on a challenge, or I just have poor performance for that week, I try to ask myself, was it something about the markets? So whether it was the edge, the strategy itself, market conditions, something that I missed when it came to my confirmation checklist, what was it about this trade? Was it something market related? Was it mindset related? Did I show up foggy headed? Did I show up late to the charts and try to force a trade? Was I in the middle of a big financial purchase and I was looking at my trading results in context of that financial purchase? Okay, or was it money management? I made some errors in the account because I started to over leverage, under leverage, held trades too long, let them reverse. What was the issue? So looking back at your performance last week, because again, if you guys are not at least taking what happened last week and making a commitment to make new decisions or better decisions this week, you're not going to make progress. You see these folks that have massive changes in their life 3 to 6 months into a new regimen. And you have some folks that are 1, 2, 3 years still not finding consistency. So look at your results from last week and then use that information to build a game plan for this week. What are my top 3 priorities? So if I'm saying, personally, I don't trade Sundays and Mondays. Sometimes I'll trade Mondays if it's the weekly low or high, but I typically don't trade Sundays. Does that mean you shouldn't trade Sundays? No. You are a unique individual with a unique set of problems and opportunities. The problems are the things that you're gonna fuck up this week, that you're not planning for. You're not sitting down and saying, okay, what is most likely going to get in my way of trading this week or get in the way of me being successful? Well, every week I make money by Thursday, and then Thursday or Friday I give it all back. But I really think I need to learn about fundamentals. That's what people will say. It's like, no, you could have just stopped right there and said, my biggest issue is that I make money and give it back. Okay, so for your unique circumstance, your number one priority this week is not to catch the low, to catch the reversal that might or might not come, to catch the best and wick entry. We want to do those too. Your number one priority is to make sure you don't give the money back. You're going to set up a system to walk away. You're going to set a goal or a target that once hit, you know exactly when to step back. Make sense? Put something in the chat if you guys are ready for this week. If you're going to take everything that you've learned into consideration, because on any given week, you could change the trajectory of your trading, but you have to choose. You got to sit down and make a choice to be better than you were last week. And change is uncomfortable. And no one wants to make improvements. And you can't improve what you can't measure. So if you don't even know that you're fucking up, that's step number one. But I know that if you're watching this stream, it means that you have a long-term perspective for trading, and you have every intention of making this work for you. So in that case, I do want to see you guys take this serious, because you're not going to make improvements without a very deliberate emphasis on reflection. What the fuck just happened? Okay, what can I learn from this, and what rules can I set to give me an advantage this week? Do that for 3-4 weeks and see how your life changes. Cool? Okay, dope. Marrying a trend instead of being optimistic. Yep. Never marry a trend. If you lose a few trades in the direction of a trend and the market keeps ripping the opposite direction, don't keep trying to force the falling knife. Like, this is part of your risk strategy for all of you that have been with us. You guys, I've shown you the trading plan, which is absolutely crucial for you to have. The trading plan, not only when we look at the risk strategy section, it's not only your risk per trade, risk per day, risk per week. Okay, when we're looking at those sort of like maximum daily risk and weekly risk, that's about capital preservation. That is, what do I need to do to avoid blowing the account? But then there's other small considerations, like how many trades a day before I walk away? Not for the financial reasons, but for my mindset and for my ability to make good decisions. That needs to be in the risk strategy. When I'm trading in the direction of the trend and the market continues to rip the other direction, how many trades do I take, or what percentage do I lose before I take a step back and say, maybe the market's turning around. Let me wait this out and let the market confirm a break of structure before I try to guess. Okay, so as part of your risk system, know when to walk away, or not walk away, but take a step back. And March, I think, is going to be the step back sort of season. So if that's not one of your strengths, make sure you're prioritizing it, because now if we're going to get slow conditions or we're going to get choppy markets, you don't want to be the person either digging yourself a hole that you have to dig out of all year, or giving back the profits you've already made in the past 2 months. That can't be you. Okay. I said I'm long NAS. It's going to the moon. Yeah, I mean, I'm still holding a small piece of the position from last week. I ended up taking a long. More than likely it hit break even, which I haven't checked. I'll check after this. It very likely hit break even. All right, let's do news real quick. Give you guys some updates, and then we'll do fun. We'll do technical analysis. So I'll just show you the trades I'm looking at for this week. Show you the price levels. That's going to take a few minutes because I'm going to do it pretty quick just to get the levels out to folks who just want that info. And then stick around for another 15, 20 minutes after for Q&A. And then we can talk about prop firms, the current state of the industry. We can talk about the world tour, fundamentals, and of course, any questions about the strategy that you guys have. Okay, let's get started. Oh, how can I forget? Over the weekend, there was two really important pieces of news that dropped. So obviously, NVIDIA record earnings, everybody saw that. There was, I'm not sure if it was Bezos, but I forgot which one of the four I mentioned earlier had sold, I think, $1.2 billion of their stock right after the closing bell. I'll try to remember it. So that was the first one. The second one is something that Jerome Powell said at a speech on Friday, and you guys would not believe what he said. He said, head over to fxsummit2024.com to secure your tickets to the #1 most anticipated conference of the year for traders, investors, and crypto enthusiasts and entrepreneurs. It's in Dubai, fxsummit2024.com. Link is in the description. Let's get to the Forex Factory news. Okay. Durable goods. Don't care. S&P composite, that could be interesting. A lot of these composites are like these surveys have horrible sample sizes, so they're not that accurate. Consumer confidence, this is a big one. This is what we want to see. Consumer confidence comes before retail sales. It's sort of like an early indicator for retail sales. Retail sales is an early indicator of corporate earnings, or just basically how much money companies are making, which is an early indicator of GDP. So more people are confident about their ability to spend, means more people spend, which means companies make more money, hire more people, borrow more, buy back their own stock, and other economic activities, which then boosts GDP. So this is one of those early indicators we watch out for. Preliminary GDP. Okay, so preliminary means this is one of the earlier estimates. It's not the final number. And this is going to be for the last quarter of 2023. So the last 3 months, we're talking about October, November, December. Expecting a 3.3% growth rate, which is solid. So a rule of thumb, and again, guys, this is in economics, we don't have a rule of thumb that is like, there are no set rules like there are in hard sciences. Social sciences or economic sciences are they're dynamic. There's a lot of shit that goes in there that you really can't account for. That's what makes an economist's job a lot harder than, let's say, a physicist or a biologist. With a biologist, a chemist, or a physicist, there's a hard answer for almost every problem. There's a set number, there's a boiling point temperature for everything. There's a rule. When it comes to economics, it's like, so I'll give you guys the rule of thumb that I've been using, which is as long as GDP stays above the inflation rate, the economy is in a pretty decent shape. Now that's about 60 or 70% of the way there. That's directionally correct. Are there some small nuances and are there exceptions? Of course. But when you guys are looking at economics, don't go so deep into these details. I can't tell you how many people talk about fundamentals, or they do analysis, and they purposely make this shit harder than it needs to be. Otherwise, why would you keep going back? I told the Chart Addicts members earlier this year, if the Fed keeps printing money, stocks go up. And if the Fed stops printing money, stocks go down. I told the team earlier this year that if interest rates start going up, which is an unexpected scenario, we will have a Armageddon for the stock market. Stocks will crash, right? So these are rules of thumb that are very simple and they cover everything you need to know. So a lot of you guys have been asking me how to get into fundamentals. Obviously, we have the fundamentals course as well as the trading news course, which are part of the same thing now on the website if you guys want to check that out. But more importantly, look at the big picture themes and big picture relationships or mechanical relationships between two different pieces of data. And then as one moves one way, the other one moves the other way. Look at correlations, and it'll make your life a lot easier, as opposed to trying to understand every financial instrument, every data release, and how it plays into the big picture. It's a very complicated game. Eventually, you should go down that road, but to make money, stick to the big picture. Core PCE. PCE is a more accurate measure of inflation. This is the primary measure of inflation that the Fed uses. And it looks like the rate of inflation growth is going up. So not only is inflation not coming down, we're not seeing negative numbers, the rate that it's accelerating, like the rate that inflation is coming back up, is starting to go higher. Something to watch for sure. This is going to be the biggest event of the week. Obviously, there's the G20 meetings, the top 20, let's say, economic superpowers or political superpowers in the world meeting to talk about the state of global politics and global geopolitical affairs. Okay, pretty boring week. Not too much going on. If you trade other currencies, then you might have a much busier week ahead. But I'm mostly looking at the USD pairs or USD news, things that affect the American economy, because that is the most closely related to the NAS100, which is what I trade. Cool. All right. All right, let me show you some trades. I have not analyzed NASDAQ yet. I deleted all my charts the other day doing a coaching call. Went into the replay feature, lost all my markups. What a shame. Okay. Personally, I'm still confident in some kind of rebound to the upside before we crash, but this is what waiting is going to be for, especially going into March for the next 5 days as the monthly overlap hits the monthly close. Want to be mindful to not force either direction. Trade inside of the ranges, buy low and sell high. Don't go too heavy, right? It's like all these rules we know, but it's even more important during high volatility times or during choppy markets. When the market is flying and you're breaking your rules, but the market is paying you and you're getting rewarded for doing shitty behavior, it can seem like, okay, yeah, you can get away with it sometimes. You don't start paying for those mistakes until the market conditions start to get real choppy. That's when it sort of exposes the lack of the lack of discipline with the strategy. That's where it all comes out. I'm just here to show my appreciation for all the content you uploaded. Much love from Belgium. Oh, thank you. For producer Scylla or Prod Scylla, whatever that is. Dope stuff. Okay. Headed down to the smaller time frames to find the body of this candle here. Track the lows. Go ahead and adjust my fib to the body. Head back up to the higher time frames. Oh, that's even better. Oh, I love this. All right. Members, you guys know what I'm looking at. Same exact structure from last week where we have this local low. And even though we have the real local low is all the way down here. So we could even draw the fib from the very low to the high. But then when I go to match up the fibs with price action, nothing really lines up. Now you can see the 38 is a big miss. The 61 doesn't have a lot of rejection. So I'm gonna delete that one. And I'm gonna keep the original fib that I had drawn. You could see that Because of course, when you draw your Fibonacci, you have to not verify, but you have to confirm the price levels with structure. Because if the market doesn't confirm those zones, if this fib sequence is not being respected, there's no rejections at these levels, then the fib sequence is invalid. And the more touches that you have, the more that, the more effective that it is. It's easy to be like, oh, it's a coincidence that the market just hit this zone. It's easy to say that unless you have other levels that you can verify. You see the support here at the 61, turn to resistance right here. The market is clearly respecting these levels. We have a resistance right here, and then resistance here at the 38. And then if I was to draw the 50, it would be the support right at that level, turn to resistance. So the sequence is valid. 886 is right here. Now I can get rid of my fib. Not yet. Hold on. And then, of course, the extension. So with the fundamentals, it makes sense that we could see a pullback on stocks, and especially with all these big names selling. But with that also being said, if I was big market participants or big market movers, and everybody on social media and everybody on the major news networks is talking about how Nvidia's run is coming to an end and how maybe AI is not the future and maybe this is another tech bubble like the '01 crisis. The more I'm hearing that, the more I see that there's short positions getting set in the market. And if I was one of these market makers or market movers, I would spike the market so far bullish that it would clear everybody's stop losses. And then, and only then, would I sell. So I know it's a compelling story. I personally believe that even when we're at an area where the market should turn around, that's the exact time that the early sellers get crushed. So I'm not going to be somebody who is, I want to say, prematurely jumping into shorts. All right. I'm still going to expect that spike. I'm still going to look for these retracement levels. And so for those asking me to clarify between my fundamental bias and what I think could happen versus what the market is showing us right in front of our eyes, you got to trust your eyes, trade what you see, not what you think. And then if the market breaks structure, then you can reassess and start from scratch. 75 points on the SL. It would actually have to be 80, which isn't the worst. It's not the worst. We're looking at 3.6 to 1 R. If you take it to the previous high, we're looking at 2.6, but the market's still bullish, so I'm going to expect that extension level. Move that up. 3.6 R. You guys get the drill. All right. This is so easy. Oh my God. You're not going to get better structure than this, especially on something like the DXY. Phase 1, phase 2. Okay. And then at the end of phase 2, reversal pattern. Inverted head and shoulders, left shoulder, head, right shoulder. So you have phase 1, phase 2, inverted head and shoulders. If this doesn't go up, I'll eat my shoe. All right, let me chill. Let me take that back. Anything can happen in the markets. I could easily be wrong. This thing is headed to magnets don't lie. Okay, so obviously anything can happen. There's a probabilistic. There's no certainties in the market. I don't want any of the new viewers to watch this and be like, oh my God, this guy said 100% it has to happen. I was being facetious. All right. You could argue, I was hyperbolizing. Right? So, but magnets don't lie. So you can do whatever you want with that information. The magnet indicator is quite literally undefeated. Like 100% hit rate, undefeated. And so there's a piece of me that 105.6, when I close my eyes and I think about what I want the future to look like, there's flashes of, beautiful places I'm traveling and a happy family and just gorgeous women. Yeah, of course. But then that number just comes right back into the view, 105.7. I think that's where the dollar is headed next. Euro USD and GBP USD could be primed for some shorts. And I think we can end up seeing a continuation on USD JPY. The reason that I would hold off on USD JPY versus the other two, so EU and GU shorts make a lot of sense, especially with the European economy sort of taking a hit and the currency losing some value relative to all the rest. USD JPY is in the middle of a pullback, as you guys can see here. We'll check the indices first. So here's the JPY basket, which is basically the DXY, but for the Japanese yen. So something to remember about these currency index baskets is that the DXY doesn't just represent the dollar, it represents the dollar versus every other major currency. So it's a basket of currencies weighted based on their importance. So if the DXY is going up, that doesn't just necessarily mean the dollar is strong, which is why you guys can see in certain market environments where the Fed is printing money, but the dollar is still going bullish. People get so confused by that because by the laws of supply and demand, if you're increasing the supply, the value should go down, but it doesn't because every other currency in the world is losing even more. So currencies are relative, very important to remember that. There's two reasons the DXY could move. It's either the dollar is getting stronger or the rest of the currencies are just taking a massive hit. Okay? Side note. This is the JPY basket. I'm using the yen index basket from FXCM. You can see here on the weekly breaks of structure, and then we have just broken structure again. All right. I don't know what I was seeing here. I think I don't know which chart I was looking at for the yen basket. This thing's got a long way down, but a pullback and then a short could be expected first instead of just like one red candle flipping to the downside. So a little bit of a pullback to start the week, and then I think that we end up bearish on the yen basket, meaning UJ to be bullish by the end of the week. But the first few days, I would relax a bit. Unlike EU and GU, which I'm going to pull up here in a second, which it might be a now or never kind of situation for those. So let's take a look at this. All right, so we were analyzing this a couple months ago, I believe. Yeah, this is back in December. We were waiting for this thing to come up and hit. It went all the way through the zone and then closed under, but this is right around New Year's. And so, most people were off the charts. And then this was the first day of the year. We ended up seeing the massive sell-off. Then we consolidated for the first few weeks of the year, and then we've been on a kind of a bearish momentum since. Okay. See this area of support here getting formed, but we did have a break of that structure. So then if we're going to assume sells, what we would do is look at the most recent impulse. So here's the top of that recent impulse. Here's the bottom. And I would measure that with a Fibonacci retracement just to see how much of that previous impulse has been corrected. All right, we see the market has hit the 88% and done a beautiful rejection. And yes, 88.6 boys works on currencies too. And growth. Drop, retest. Okay, so one more touch of the 1.085 could be the perfect entry that we need to head to the bottom of the range. So an immediate target for Euro USD would be 1.057. So keep that marked off. That'll be the target. How we get there is going to depend on the opportunities the market gives us up here. So we have a playbook, we have a target. Now we're just going to wait for the entry. Any questions on Euro USD, dollar pairs, UJ? Kind of bunched them all up into one category with everything that has to do with the DXY, but pretty straightforward stuff. Swing trade opportunities, and then of course when we get a big pullback on Euro USD, we can jump right back in. 734. Max said, "Clip that." He said, "What are you guys laughing at? Which joke was it?" I'll have to timestamp it. 734. All the funny shit I'm gonna start timestamping because I was going through. Oh, you said the magnet? Oh yeah. Oh, he said it was the vision for you. I mean, why do you think they call me Pipstradamus? Back when I used to send signals, I would just be sitting there. All of a sudden, I'd be like I'll pull up a chart and I'll just like spaz out a little bit. I'm like, oh, I'll be sitting there typing. People used to make jokes like, oh, they found Roy in a cave, right? My eyes would just roll back. I would just start scratching on the side of the cave. Somebody would have to translate the signal for the real world, and it would be sitting there typing as fast as they could. Sometimes it just comes to me. I don't know. They call that subconscious competence. With such a deep memory bank of experience with this thing, I get that spidey sense. You guys know exactly what I'm talking. Some of you guys have watched That's So Raven. You guys know exactly what I'm talking about. You've seen Jimmy Neutron, right? The brain blast. You guys know exactly what I'm talking about. That happened. That's how I find these trades. Everyone's like, Roy, what's the secret? Is it the fib? Can I see your fib settings? Not the fib settings. Never was. They'd be like, this whole time? All right. Um, okay, you are going away. Waiting for a minor bearish retracement to get back in longs. Good. I'm just here to show my appreciation. Awesome. My fib doesn't show the 886. Get a load of this guy. All right. I agree with the dollar buys. So you can download it right next to the magnet indicator. If you search up magnet indicator, it'll be right. I'm joking. That's too far. That was a joke. You can find it by going to my TradingView tutorial that's free on YouTube. I agree with the dollar buys. I'm still bearish on AU. Good stuff. When it lines up, perfect. Says, what about AU, bro? Kareem, I just explained the basics of currency correlations. So if the dollar is going bullish and Euro USD and GBP USD are going down, you got to be able to do the rest of the work for yourself. All right? Get back to me with the answer in the chat. Let me see what you come up with. If you disappear on me, I'm going to kick you off this channel. All right? So put the answer in the chat box. Yo, this dude going to call me bro and Mr. Addicts and ask a question and then get disrespectful? Not today, Junior. Do you think it's all this platform migration will allow US traders to return to the prop evaluation purchases? All right, let me finish this up. And then I'll take Q&A about the prop firm space. Okay, NAS100, very straightforward. Looking for short-term buys at the 17,880 level. All right, 17,880 short-term buys. Protect the trade. If it continues to run, beautiful. If not, so be it. You're looking for a fill of this wick. So once the market starts to push up, we have take partial zones. Once the market starts to fill this wick right here, after about halfway, you know that this thing is going to most likely break. Very rarely do double tops happen through a wick fill. So if you have a full wick fill and then get a perfect double top and drop, not as common as the break above the highs to fill the wick and then retest and go. So if you're going to be in those longs, make sure to understand where to get out and not to overstay your welcome. Hit us the magnets. To show us the magnet indicator. Hey, y'all thought you got to get the extra super elite VIP membership to get access to the magnet indicator. All right. So once you graduate the premium elite maximum VIP membership, then you have to take the ultra super premier membership, and then you combine both of those and you get access to the magnet indicator. All right. It'll be lit. Okay. Straight off the shelf. Yeah, ha 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 ha. Very funny. Okay. Goodbye. Thank you so much. No problem, AB. Does NAS get volume in Asia session or just accumulation? Here are some rule of thumb here. Never trade NASDAQ in the Asia session if you love your life. If you love your mental health, if you respect, you're not having a heart attack at 42, don't trade NAS in the slowest session out of all the sessions. Now, pre-London's a little bit different. So, for example, right now it's around 8 p.m. Eastern time. Granted, it's Sunday, so New York markets are closed. With that being said, there's still volume that's going to happen in the session overlaps tonight. So if there's a potential entry here at 17,880 around midnight or 11:30 p.m., so 3 hours before London, and I get the alert, I'll take the trade. So if the market's outside of my sessions, I can still enter a position, but I can't expect any volume until the high impact sessions like New York. So I'll enter the trade, go to sleep, make sure that my stop loss is wider than I think I need it, because you don't want to wake up to a stop loss hit and then it goes your way. So then you have to lower your lot size and lower your position size in general, because obviously when you're holding a position too big, we all have trouble sleeping. You're not going to just over leverage on a trade or put a position size slightly too big and then just go sleep like a baby. That shouldn't, I mean, I don't know. Depends on your personality, but I don't know. I have not found that to be the best night's sleep. So then lower your risk, set your take profit more conservative than usual, because you don't want to wake up to the market having gone 5 pips or 5 points close to your TP and reversing. So be conservative taking profits. You do all those things, perfect. There's some of my best trades have happened entering right before I went to sleep and during Asia or pre-London, holding it overnight, waking up right before New York to take profits hit. Cool. All right. There's a bunch of stuff about ranges and session times that I'm going to cover with the CA members this week. Some pretty good findings. But this is about as basic as it gets. Higher time frame, if we break through this structural low, the 17,800, there's a lot of room to the downside, and then we'll look at some of those levels if that breaks. All right, so for now, we're playing inside of the smaller time frame ranges. US30. US30 had a beautiful expansion out of this range, and then now we're starting to slow down. We have this potential 3-drive pattern forming here. So we have this double top. We have the liquidity grab. So we talk about this all the time at the Chart Addicts group, where I talk about the touch, liquidity grab, and run. So this could result in a break of this local support, head down to a retracement level, in which case, to the members out there, that's your new structural low. Okay, so you have this whole area here where there's no traffic. This is your consolidation range, and this would be your breaker or your break. So fib here to top. That's how you find your entry. Any questions, comments, concerns? I would do the work for you, but that's not the beauty and benefit of being around here. And so you can go and do this for yourself and be a self-sufficient trader. So you don't have to listen to me. Okay? Everybody cool on this? So for now, there is this local support. If this local support gets breached, then there's the next level sitting right down here, 38,860. I just eyeballed that. And it's probably spot on. Go body to wick. Stop! Come on, y'all. 38,860. I could eyeball an 886 from outer space. All right. I can eyeball a 1 minute 88.6 from outer space. You tell me, oh, here's a building right there. Where do you think 90% of the way back is? I tell you damn well where the 88% is. If they need somebody to eyeball the 88.6 on, right? I can never be an astronaut. If for some reason I would be the most useful person in the world in an apocalypse if finding the 88.6 was how we survived, right? I would be the most useful guy. They'd throw the doctor overboard. Right? You guys know you're either crew or your cargo when the apocalypse happened. They're throwing the doctor overboard. They said, all right, you know what? Fucking, right? Who needs stitches anyways, right? Right? They're keeping me on there. Besides that, I have one use for that skill, which is to make as much money as possible on NAS100. Okay? Thank you for coming to my TED Talk. Ladies and gentlemen, happy Sunday. Stick around if you guys are interested in the Q&A portion so I can answer some of these questions. Let's talk about So Kareem needs to occupy his mind a little bit more. Brother, there ain't nothing happening up there. It's empty. Okay. It's You guys ever seen the tumbleweed in those old Western movies where it's just is you all you hear is the whistling, just right? The tumbleweed is going in. That's what's going on in his head. So don't try to, right? You got a long road to say, I'm gonna help Kareem out even if it kills me. Buddy, you might fucking die. Okay. So just leave it alone. All right, let's talk about prop firms real quick. A lot of changes happened in the industry. We all know this. Back in January, FTMO kicked everybody off, kicked US traders off the platform. Where are we right now? I'll give you what I'm personally doing, which is I'm going to wait 2 to 3 weeks before purchasing any more challenges. So I was looking at Top Step, Apex, and My Funded futures, which are 3 futures prop firms that I was eyeing to get started this week. But the more I learn about what's happening right now, the more people that are doing the DX trades migration solution, the more large scale migrations are happening. There's going to be a shit ton of problems on these servers. So personally, I would wait 2, 3 weeks to buy a challenge right now, let the dust settle, and then it'll be a lot easier to make up our minds. Okay. Those are the 3 firms I'm eyeing: Top Step, Apex, My Funded Futures. As a caveat, I have not used either of those 3 firms yet. I will be doing so live here, but I do have a lot of trusted friends that have recommended those to me. With that being said, US traders, we're not going to be able to, I don't think that we're going to be able to trade prop firms for the foreseeable future. I'm expecting FTMO to take the existing accounts here in the next month and a half, and then everybody else will follow because everybody's late as shit. They don't realize FTMO is a leader. So they're going to just like sit there with deer in the headlights and just mouth breathe until the wave hits them a month and a half later. And then everybody else will deal with the same issues that FTMO has. So right now, clearly a lot of changes happening in the prop firm space. It's here to stay. They have to figure out the logistics about how to word it, how to word their advertisements, how to promote the brand with their affiliates without them going out there and making false claims and getting them in trouble with financial regulators. So I think that's the game today. I think the game today is just going to be if these guys restructure legally in the United States, whether they get regulated, but whether you're trading CFDs, which is just illegal, or futures, which are regulated by the CFTC, there's an unbelievable amount of registration you have to go through. And I know it's normal to us because we've been trading prop firms for years now. But if you guys go to the regulators and you tell them what a prop firm is and what these guys are doing, these guys, they're going to have a heart attack in there. So the idea that any of these prop firms are going to go work hand in hand with regulators to figure out the rules of the game, I think is very slim. But that's what I would do in their shoes, and that's probably what I will do once the dust settles. Find the regulators. So maybe book an appointment with somebody who's a regulatory authority. Bring a legal team that are ex-regulators, get the rules of the road about what we're allowed to do and not allowed to do, and then you can start something in America for US clients. Okay, so if no one else will do it, we will. But for now, 2, 3 week hiatus. More news. What else? World Tour is confirmed. We're hitting New York next Friday. I don't think we're going to have time to do a seminar in New York next Friday, but I'll be flying back for a very special interview on March 16th. Guys, I'm dropping interviews in the next month. Like we have interviews that have been getting recorded for the past few weeks, interviews that will be recorded in the next month that are going to blow your mind. We've exited the retail trading scene, kind of headed straight to the belly of the beast, straight to liquidity. We're interviewing the market. All right. So I'm interviewing NASDAQ himself. No, it's going to be super dope. We'll see how that goes. All right. Besides that, what else? So yeah, March 16th. If you guys are in New York, we're going to have a wait list that we put up this week on the live streams. Get on, get access to the wait list, put your name in your city so that whenever we hit your city, we can let you know in advance. Bring your friends. It's a completely free tour. I'll be bringing together some of the best traders I know and some of the people who are building or at the top of this industry. So folks like, I can't even promote this shit without even saying the name of the companies. I just said think about like TradingView and TradingView type companies, right? We're going to go talk to them, see if they want to come to the seminars and give some free game. We'll be talking about algo trading too. We'll be bringing on folks to talk about that. Taxes, bring on a licensed tax professional, CPA, that specializes in taxes for traders to help us understand how to structure things better going into 2024. So, if you guys are excited about that, keep an eye out for the wait list. Very excited to see how that goes. All right. Oh, yeah, and Max. The 88.6 boys merchandise and the 88.6 girls merchandise launch is going to be March 1st, which is Friday, I believe. Friday? Yeah, Friday. Yeah. Okay. Had to double check. March 1st. So if you guys are interested in getting the merchandise, Max, if you could drop the link in the YouTube chat and the Discord, that'd be awesome. Okay. When is the next NAS100 masterclass? To be honest, we said it was the February masterclass was the last one. If we keep getting that question, we'll put out another poll to see how everyone's feeling about it. But I love the idea of knowing that the folks who took the class, they have this info and that's it. But there's also kind of like I mean, that's disrespectful to the thousands of people that could also take it and be in that same spot. So we're kind of wrestling with it. What do you guys think? Because like we said, it was the last NAS masterclass. We were serious about that. But I can't tell you how many times a day we're getting asked about opening spots for the masterclass. But I know that like I don't want to tell people, hey, this is the last one, and then it not be the last one. Let me know what you guys' thoughts. We can get through that. Okay. He said, go outside and touch grass. Jesus, 100%. Well, same with Martin. Martin just needs to wipe off that dude's just, you know what I'm saying? Just been slobbing on this dude. Fucking handle yourself, but you look embarrassing in this chat. Okay. All bums. All bums. Most of this industry is straight bums. Okay. Good stuff. God, I knew there was one more thing that I forgot. Oh, mindset, 3-day mindset boot camp. The 3 days are going to be split between number one is going to be sort of like a general outlook on the 5 to 7 priorities that are going to help make you successful. So that being family, faith, fitness, so your health, your diet, your sleep. So first is like the physical and cognitive and just overall health oriented habits that most of us, especially going into the new year, everyone has goals to be the best them. They start to fall off because they don't have a practical strategy. They don't have steps that they can follow to actually get there. If you guys have taken any of our courses or any of the classes, I'm all about giving it to you as practical as possible. So yeah, we're going to cover the concept because you got to know. You got to know why you're doing the shit you're doing. You can't just be following orders blindly. But once you have the context, there needs to be practical step-by-step systems to help you achieve your goals. So the Mindset 3-day bootcamp is going to be number one, focused on sort of those lifestyle habits to fix up. Number two is going to be focused on goal setting. So most people don't achieve the shit that they want in their life because they don't know how to set goals. It's not like, I want a red Ferrari. But what the fuck are we talking about here? How much is a down payment for a Ferrari? What are the monthly costs? What are the monthly maintenance costs? What's the depreciation on the car every mile you drive it? Okay, that's goal setting. So, okay, I need $100,000 for a down payment on this car. Okay, the monthly payment is $4,000. Got it. $5,000 a year in oil changes. Done deal. New tires because I'm a dickhead. 20,000. Okay, now you write that down. Say, okay, first year expenses, $158,000 or $162,000 all in. Okay, so now instead of saying, okay, I'm going to buy this $500,000 car, I need 500,000. The goal is now 160. Okay, can I use this as a tax write-off? Well, maybe. Well, how much money will that save me if I make $1 million in a year and I owe 450,000, but I buy a car that's a qualified business expense for 180? I don't owe 480,000. Now I owe 320. I spent the rest on a car. as a qualified business expense. That's a goal that you can set and work towards. I know that's an egregious example. Take buying a new house, buying a new thing, taking your family traveling, quitting your job. There needs to be an aggregated number there that you can aim for, and this needs to be split into steps and milestones that are achievable. So number 2 is going to be on goal setting. And number 3, day 3, we're going to focus on trading psychology and trading mindset. How all of this relates to your thoughts on the charts, the biggest threats to a trader, right? The biggest sort of red flags to watch for behaviorally and emotionally, and then steps and practical systems to stay ahead or to get ahead, stay ahead, and get back on track. Cool? Link is in the description. Looking forward to seeing you all there. It's only $250. Having the right mindset will make it, I'll say easier. Having the right mindset can make you millions or more. Having a lack of clarity is going to be like, whenever I think back to my life and times where I'm slacking off on reaching my goals, it's typically not because I'm not working, but it's because I don't have clarity of the exact goal. Maybe I'm like, oh, I got to get as many of these things as possible. No, it's I gotta find. Let me give you an example. I gotta catch as many pips as possible. Just really making that a goal and just working towards it. Then you take a step back. You're like, fucking catching pips is not the goal. I've been working my ass off and achieving results, but there's no clarity about what was actually going to make me successful. Risk and reward and win rate, focusing on both of those made me successful. So now you're able to work on the right things. Okay. Trading mindset, very crucial. The wrong mindset hinders your ability to be a multimillionaire, and everybody here has the capacity for it. All right. Market just hit the buy zone, but it's Sunday. So I'm going to be a man of my word. Not going to trade today, but I would wait for this thing to dip through first and then enter below the zone a little bit around 850 to 880, this 30-point range. If you choose to enter, because I know some of you degens out there, you'll hear me say that I'm not trading it. You're like, perfect, more pips for me. And then you just jump in. So if you do that, wait for the grab through the zone first, because it's going to grab stop losses that were sitting here from last week. Okay? Happy and safe trading going into this week. I'll see you guys every morning for the live trading stream for New York session. Great to see all of you. Beautiful. Honestly, hearing you say it was the last one had me in pain because I was aiming for it. You should make another one. All right, well, we'll see about that. Drop a like on the way out. If you guys enjoyed this or you guys learned anything at all, drop a like on this video. Catch you guys later. Take it easy. Peace.